In this series of videos, we're going to go over Odoo 19 accounting. There's been a lot of changes from previous versions, so we'll explain those changes and how we can utilize and set up Odoo for Odoo 19 accounting. So let's go into accounting to start things off. I'm in a brand new environment. I just installed the US localization in a brand new environment with several apps installed. We'll scroll down to inventory valuation. Now, this will look quite different if you're familiar with previous versions of Odoo. In previous versions, we had a concept of automated inventory valuation and manual inventory valuation. In automated inventory valuation, journal entries would be created in real time against your stock moves in order to update your balance sheet. There was also the concept of stock interim accounts that were utilized in the interim between bills and invoices being created against stock moves in and out. Now, that was great. However, it created a lot of journal entries and a lot of noise, which ended up slowing down some databases. So in Odoo 19, they've taken a different approach, allowing the batch treatment of your update of inventory. So it's essentially treating inventory as a true subledger and then reconciling that at the end of a day, week, or period, depending on your settings. So in Odoo 19, what we have is periodic at closing or perpetual at invoicing in terms of the inventory valuation methods. And if we go over to the Odoo documentation, you can see the exact reasons for each. So periodic will post vendor bills as expenses by nature and update stock valuation in the closing entry by reducing expenses. This is best practice in Europe. Perpetual will post vendor bills as assets, report expenses when goods are sold, and this is best practice in countries that utilize Anglo-Saxon. That is what we're going to primarily focus on. Now, in conjunction with our inventory valuation changes is a new report called, under review, you'll see inventory valuation. And that's going to track essentially our changes from what our stock valuation account says on our balance sheet and the moves that occurred in our stock valuation inside of inventory. And then at the end of a day, week, or period, an adjustment entry will be created in order to set that delta in order to make our balance sheet um, update and corrected based on our actual inventory valuation. Okay, so again, we have our inventory accounting settings. We have inventory valuation. Here we can set them at closing or at invoicing. We'll do at invoicing. Our periodic valuation, either manual, daily, or monthly. Manual, we will go in and create the journal entry every time from that report that I just mentioned. Daily, the system will automatically create the adjustment entry on a daily basis or a monthly basis. I prefer a daily basis. That way, our balance sheet is updated in real time, at least daily, as opposed to in real time every single journal entry. And this really makes a lot more sense from an operational standpoint. No one is going to the balance sheet refreshing daily or every second to get an update. If you need a snapshot in a moment of time, you can always run the report manually. However, daily basis is going to be give you the most benefit in terms of accuracy while not creating a ton of journal entries that may slow down your environment if you're a very large company. Under the inventory costing method, we still have our three different costing methods: standard price, first in, first out, and average cost. I'm going to set average cost for our example. We will go over all the different types of costing methods throughout the series of videos. We have our valuation account. This is the default account that Odoo creates for us. We could change this to any asset account we want. And then our inventory valuation journal. Here again, we have our inventory valuation journal that Odoo creates, which is a miscellaneous journal type. Now, it's important to know that all of these are just default settings. They can be overwritten on the product category. However, these are going to be our default settings when we create a new product category inside of Odoo. Now, there's also some other accounts that we need to look at throughout the setup, such as our manufacturing accounts and our loss and production accounts inside of inventory. We'll look at those as we go through examples, but this is the basic setup for our accounts. Now, the really important thing that is often missed is under this valuation account, if we click into it and we'll click on save. Actually, let's go down and we'll click into that account once again, inventory valuation. you're going to see that there's a variation account. And this variation account, I'll just remove it for now, is going to be utilized to track the variation from our balance sheet to our actual inventory valuation in inventory. So in order to reconcile that subledger, the value needs to go somewhere. In this case, it's going to go to that variation account. So at closing, register the inventory variation of the period into a specific account. And then you have your expense account, which is primarily utilized for perpetual or continental. So this is the counterpart used at closing for accounting adjustments in inventory valuation. This expense account is only shown while you're in developer mode. So you'll see I have this little bug icon here. You can go to developer mode in settings, general settings, scroll down to the bottom, click on activate developer mode. So you'll see if I deactivate developer mode, my screen will refresh and you will not see that other account. You'll just see the variation account. So I'll turn it back on. We'll come back and set these how we want to. In the meantime, let's go into reporting, or rather review, and let's look at that inventory valuation report. So a couple of things to note: you can always set the date in which you want to view this report. It's going to default to today's date. You're going to see a generate entry button. This is going to get triggered automatically if you have it set to daily or monthly, or you can come in here and click on generate entry to create that journal entry that makes an adjustment on your balance sheet, on your P&L, to correlate with what is in your inventory valuation and inventory. Now, essentially what happens, just to make sure that you understand, is that we have an initial balance in our inventory. Right now, everything is blank, it's $0. So that is what's on our balance sheet from the previous period. Then we have stock variation. Those are changes in inventory that haven't been accounted for from a bill or invoice. And then you have your ending stock. So this variation needs to go somewhere in order for us to make sure that our inventory subledger, so to speak, is in balance with our balance sheet. And that's going to be our stock variation. All right, so as we go through examples, we're going to be able to see that our inventory is going to get updated depending on whether we've created a bill or invoice for the corresponding sales or purchasing. We may or may not have a stock variation that we need to account for, and then we'll have our ending stock, which will update. So all the system is doing is keeping track of what is currently in that stock valuation account for that product category. What does the system say inside of inventory in terms of what the value should be? And that is the variation if there's a delta between the two, which results in our ending stock. And our ending stock would be in line with our subledger and inventory. So let's look at inventory. I'm going to go out to my dashboard. I'm going to click into our inventory application. I'm going to go to reporting and stock. Stock will tell us our inventory at a specific date and time, and that is what that ending inventory should look like. We don't have anything here yet. So let's set up what we need to do in order to work through some examples. I'm going to go into configuration, and we're going to go into product categories. We'll create a new product category, and you'll see that our costing method is set up as average cost, and our inventory valuation is set as perpetual. Our income account is product sales. I want to update this expense account. I'm actually going to do it in general settings. So I'm going to go back to our general settings in accounting, and we'll scroll down to our default accounts. And what we'll see is our expense account under product accounts. I'm going to switch this to our cost of goods sold. So cost of goods, and I'm going to save that. So now if I go into product categories, that should be the default account. Let me give this a refresh. All right, anyway, we'll set it here, cost of goods sold. We have our product sales, cost of goods sold, and our stock account, which is our inventory valuation account. We'll call this all. And we also have the stock variation account that we can utilize. So at closing, register the inventory variation of this period into this specific account. So not only can you have it on that stock account, we can have specific ones for specific product categories. We're going to go through all of those examples in just a few minutes. For now, we'll leave it blank. So I'll go into products. I'm going to create product A. For the sake of simplicity, we'll just remove the taxes. We'll set a cost price here. Actually, let's leave that blank. We'll set a sale price as $50, and we'll set a vendor. We'll call this vendor 1, and we'll set a purchase price of $25. So now we have our goods set up. We need to set our product category to all. That's something that's also new. That's very important. Product categories can be blank in Odoo 19, so it's very important that you set your product category. So here I'm setting it to all. We are tracking our product inventory. And again, if we click into that all product category, we can see our settings. All right, so this is going to be set up for average cost. We'll go through some examples in just a few minutes. All right, now let's look at our inventory valuation report in action. We've set up our product and our product categories. Let's go ahead and purchase some raw material. So I'm going to go into new. I'm going to select our vendor. I'm going to select our one product, product A, which is tracked as average cost. I'll purchase 5 units at $25. We will confirm our order. We'll click on receipt and we will validate. Okay, so what has happened at this point is we simply received inventory in. We haven't created a bill yet. If I go to reporting and stock, we'll see we have a total value of $125. Now, no journal entry has been created. If we go into accounting and we go to journal entries, we'll see that there's no journal entries created. Again, in previous versions of Odoo, that receipt would have created a journal entry that increases our stock valuation account and offsets it with our stock interim account. However, those do not exist anymore. And again, the reason being is to not have so many journal entries that provide little value. So what does the system do instead? If we go to reporting, or rather review, and we go to inventory valuation, we'll see that our initial value inside of our stock valuation account is 0, but our stock variation is $125. So the difference between what we started with what we are ending with right now is $125. We can click on our initial balance. You'll see it's going to bring us to all of our inventory journal entries, which there are none. And we can click into our ending stock, which is going to bring us to our stock valuation as of right now, which is $125. So now we need to do something with that $125 value, which in this case, we're going to put it into cost of goods sold because we have not set an account as our variation account. Now, our stock variation account can be a multitude of items depending on the product category, or a multitude of GL accounts depending on the product category and depending on several factors. You can have it as just an interim account, right? An asset account, that's an interim account. You can have it as an expense account. So let's see what happens. Let's just set it as an interim account. We're going to create a new interim account. We'll go to chart of accounts. We're going to create a new current asset account. We'll just do, let's just do that for the sake of example. We'll call this stock interim, and we'll save. We'll copy this, and let's first go ahead and set our stock inventory valuation account. We'll set the variation account to our stock interim. And if we go back to that review and look at the inventory valuation, you'll see the stock interim account is what's going to be credited now. So we overwrote the default cost of goods sold account to utilize the stock interim account. Okay, so what we would do from here is the system is going to create a journal entry that credits stock interim and debits inventory valuation in order to synchronize our balance sheet with our stock valuation subledger. So now I'm going to do that manually instead, and I'm just going to click on generate entry here. Now generate entry, you'll see we're creating a stock variation for our company. We're crediting our stock interim, and we are debiting our inventory valuation account. And we can simply click on post here. Now, if I go back to my report, inventory valuation, you see that our initial balance, our balance now is 125, and our ending stock is 125 because no changes have occurred. So if I go into our balance sheet now, you will see under our stock interim, there's a negative value, and our inventory valuation holds the 125. These are netting out to 0, as we suspect. Now, what happens when we create the bill? So let's go ahead and create a bill for our purchase order. So we'll go into our purchase order. I'm going to just copy PO number 1. I'm going to go into accounting, go to vendor bills, and I'll create a new bill and just use the autocomplete feature. And I'll save this and give this a bill date. Now we'll see our journal items. I'm going to click on confirm. And now we see our inventory valuation has been debited to increase it, and our accounts payable has been credited, of course. So what do we see in our balance sheet right now? Right now we see in our balance sheet an inventory valuation of $250, which obviously is incorrect. But we have the stock interim account negative 125, which is giving us a correct net total assets here, which is 125. The correcting entry is going to be automatically generated by Odoo. So if I go into my review and go into inventory valuation, you'll see now we are going to be reversing those steps that we took previously. So the system is creating and keeping track of all this. And from my point of view, working with thousands of companies, this is where people get tripped up in previous versions of Odoo, balancing the accounts, having leftover in the interim. In Odoo 19, the system is going to keep track of this for you. So you don't necessarily have to do too much across or past the initial setup. So the system is just going to post this journal entry and make the adjustment for us. If I click on generate entry here to do it manually and click on post, we are now crediting our inventory valuation and debiting that stock interim account. So now if I go back to our inventory valuation report, you'll see there's no stock variation. If I try to click on generate entry, there's nothing to correct. If I go to my balance sheet, we're going to see $125 in that inventory valuation account, nothing in our stock interim account. And if I go into inventory, reporting, stock, we're going to see that we still have that $125 value. So everything is kept track of automatically for us. Now let's look at what happens when we sell goods. So now I'm going to go into sales. I'm going to create a new sale. I'll just select customer 1. I'll create that. We'll add our product A, which we're selling for 50. We'll click on confirm. Now we'll click on deliver and validate. Now again, in previous versions, this would have generated a journal entry. It does not anymore. So our balance sheet was not updated. But if we need to know our inventory, we simply go to reporting, stock. We'll see that our total value is $100. Now, if I go back to accounting and I look at our balance sheet, we still have $125 value in our inventory valuation account temporarily. Now, again, the system will generate that journal entry at the end of the day to make our adjustments and balance out our balance sheet with our interim accounts, or rather with our inventory subledger. Or we can do it manually by going into inventory valuation. Now you'll see that we have our inventory valuation, a credit of $25 and a debit of $25 to our stock interim. And that's only because we haven't created the invoice yet. Now this will work exactly like we've previously looked at, but let's see what happens if we were to just create a invoice from our sale order. So now I'm going to go and create an invoice, a regular invoice, and I'm going to click on confirm. Now what we'll notice here is that we are registering our cost of goods sold. We're debiting our cost of goods sold. That's our default account for our cost of goods sold. And then we're crediting our inventory valuation for the value of the inventory. So essentially decreasing our inventory valuation in our balance sheet. And of course, registering our $50 of product sales. So if I go into our review now, there's nothing to correct. And that's because we've corrected it with a journal entry, right? So we have initial balance is $100, ending balance is $100. So what is the value inside of our stock account? If I click on that, we'll see that the net value is $100. And if we look at our ending stock, we'll look here, $100. Okay, so if we go to our balance sheet, we see $100. So because the transactions happen all at the same time, no corrections were needed. If they separate between days and you have it running on a daily basis, those correction entries will be generated. And it will utilize that variation account that we have set up inside of the stock variation. Now, let's go ahead and just check one more thing. Let's go into our chart of accounts, and I'm actually going to create a new stock interim. Let's call this 2, and we'll call this stock interim 2. Now, what I want to look at here is what happens when we have a stock interim set on our stock account, but we also have one set on our product category. So now if I go to my product category, we go to all, this stock variation is going to automatically get set, it seems like, from our stock account. But if we change this, does this update our stock valuation? It will. So those two things are tied together. Just wanted to point that out so that you don't get tripped up. So stock account and stock variation are going to be tied together. Whatever you set on the stock variation is going to update our account for our stock variation and vice versa. So now if I put the other stock interim back and we go here, we'll see that our stock variation gets updated. Okay, that is a very simple example just to get you familiar with the interworkings of that stock report. In the next video, we'll look at some more edge cases.